This is Scott Becker with the Becker Private Equity Podcast. Today's discussion is 10 rules on investing, golf versus business, and 5 more stories. And thank you for joining us. So we'll talk first. We'll give a quick market update, then we'll get to golf versus business and 10 rules on investing. So the first point today is the markets are pointing up today with some more comfort that the Fed may go slower on raising rates. They may take a break in September, and people are starting to look at this as optimistically that we won't see another rate raise right now. Second, Tesla's having a heck of a day in the market and is up 100% year to date, more than 100% year to date. It's also building a supercomputer to help self-driving cars. Morgan Stanley analyst, has said that this may boost the market value of Tesla by $600 billion. And again, I take that with a grain of salt, but obviously interesting what Tesla is doing on so many levels. Third, Apple remains up 37% year to date, even after a recent sell-off. Its total market cap is $2.8 trillion. Its new iPhone 15 is coming soon. It's likely to be a blockbuster based on pent-up demand. Great story in Barron's. See Apple's iPhone 15 launch is a key moment for markets. What's at stake? We'll see. The fourth story we're talking about today is 10 key rules on investing. We'll have a separate podcast on this as well. But here are some of the thoughts on this. 1, your allocation of your assets, stocks versus bonds versus cash, is really everything, at least in terms of financial sanity. Just in terms of really deciding how you're going to allocate assets, stocks versus bonds, cash, we happen to love the Vanguard tools for understanding allocations. Second, you have to understand what you're investing in. So, for example, when I invest in the S&P index, I pretty much understand it. When I'm investing in U.S. Treasuries, I pretty much understand it. In contrast, when I invest in an esoteric product or Bitcoin or cannabis ETFs, I'm not sure that I really understand it. I hope for the best, but I don't have a strong conviction around it. Not sure that I really understand it. Third is you want to develop a core investment plan and define what are your core investments. For me, my very core investments are the S&P Index Fund and U.S. Treasuries. Then I'll explore with some other stuff, but those are really my core investments in my core plan. Fourth, assess whether to use an outside advisor or to do it yourself. This is a big decision for most investors. I don't have a strong thought one way or the other, but you really need to assess whether you want to use outside professional help or not. Fifth, understand your own investment temperament. Can you handle the ups and downs? I cannot handle the ups and downs that well, thus I bleed towards being a more conservative investor. You need to understand the difference between behavioral finance. How are you going to respond when the market goes up and down versus financial optimization? They could be 2 different things. You could have the best plan for your own sanity, but that might not return the highest returns, which should be more around financial optimization. It depends a lot on your risk profile and how you handle things. Sixth, and similar to this, is develop clarity about your investment goals. Are you trying to beat the market? Are you trying to get huge equity returns? Or are you comfortable getting 3 to 5% in investing in treasuries and just making some money, but sleeping better? And you have to sort of understand your own goals. And your goals may differ over time. As you get older, you might change your goals some. Seventh, we tend to bias towards index funds over individual stocks. And different people will argue about this. We also tend to bias towards individual bonds over bond funds. And a lot of this comes from my own experience in the markets. On individual stocks, I think it's very hard to pick individual stocks. I'd rather invest in the SP Index Fund. On bond funds, once you have a loss on a bond fund, it could be a permanent loss. Where you invest in an individual bond, it might get you back to par somewhere, wherever it pays out. So different thoughts and different things. And you learn over time. As I suffered some losses in bond funds, I started to have more of a bias towards individual treasuries versus buying funds. But just again, it's a learning experience, but those are our biases. 8th, never borrow to invest in stocks. I can't say this strongly enough. 9th, understand all your assets and how they impact your portfolio and the risk profile. So, for example, if you own private real estate investments or part of a private company, this ultimately is part of your portfolio and goes in your equity mix. So when your advisor says, you're being too conservative, you don't have enough equity, you have to also account for not just the equity in your direct liquid portfolio, but the equity that you have in other things that are also part of your higher risk portfolio versus your bonds and cash. And a point on that I'll just sort of put out as a footnote is bonds aren't all created equal. Different bonds have very different risk profiles. We tend to personally bias to safety over absolute return, but that's very personal what people are looking for themselves and have to decide what they're looking for. Finally, which is also a PS, keep an emergency fund as well. A few other points today that we'll make. Both the Becker Private Equity Podcast and the Becker's Private Healthcare Podcast were ranked in the top 10 in the Apple Business News rankings this week. Thrilled about that. Becker Private Equity ended up being in the top spot for about a week, which is just fantastic. Another quick point, then we'll get to golf versus business in a second. 3 of our top listened podcasts on the Becker Private Equity Podcast are Rick Kess of RSM, Nicholas Schull, the son of David Schull, and one of the leaders in the Gator Student Investment Fund. If you haven't watched the documentary Swamp Kings about the University of Florida football, it's worth watching. And third, one of our other most listened to guests is Julie Yu, who together with Vinita Agarwala, Dr. PhD, are brilliant investors at Andreessen Horowitz. Those are 3 of our most listened to guests on the Becker Private Equity Podcast. 3 of our most listened to guests on the Becker Healthcare Podcast are Dina Valachi, former president of the American Association of Nurse Anesthetists, Don Cinco, Chief Integrity Officer at Cleveland Clinic, and Justin Oppenheimer of the Hospital for Special Surgery, HSS. Finally, golf versus business. And here's our thoughts for the day on golf versus business. And I know these analogs are so overdone, but I'm going to try anyways. And you could probably make this analog about almost any sport to business. And here's what I've found. And golf is part of the most recent sport that I'm suffering awfully at, trying to get better at. You could become a good mid-handicap golfer by being good at 2 to 3 things. If you're pretty good off the tee, you're pretty good on your short game, and you're pretty good on your putting. You're a pretty good mid-level golfer. You're similar if you're not so good off the tee, but you're good with your irons, your short game, and your putting. You become a pretty good mid-level golfer. But if you want to be great at golf, unfortunately, you got to be great at all aspects of the game. And this is very challenging for me as a simplifier who always looks to double down on their strengths. What I found in golf, if I actually want to be good at the whole game, I got to work my weaknesses as well as what I'm naturally okay at. And in business, it's pretty similar. You could be great in business and a mid-level handicapper in business by being good at a couple things. You know, we always talk about people building software companies. You got to be great at product development and commercialization. Or you could be great at whatever business you're in, sales and execution. But the unfortunate reality, if you want to grow a great business, the reality is it's more complex. You're going to have to be great at several things: team building, strategy, execution, sales, product development. There's a number of things you have to be good at. And where I find the similarity is I reached a certain level of golf, went from being absolutely awful to awful. What I found in golf was that if I really worked on a couple things, I can get better. But I can't get to that next level without being great at a lot of things. And I think it's very similar with business. You could develop a great mid-sized business by being great at a few things. But if you want to build a great business of a certain size, you've also got to find a way to be great at, how do you do this at scale? How do you do this in other ways and so forth? So I think there's an analog. And I'm sure, quite frankly, this analog is true in a lot of things, not just golf versus business, but it's the latest place where I'm struggling. So I think about that often. In any event, thank you for listening to the Becker Private Equity Podcast. And thank you to our wonderful producer, Chanel Bunker. Thank you very much.